Now, job costing was the traditional way of doing cost accounting, but the manufacturing environment has changed rather dramatically. In the past, manufacturing overhead was only about 15–20% the total cost to produce a product. Today, because of the advance of robotics and computer-based manufacturing, most manufacturing is done by machines, so therefore direct labor is a smaller part of the total cost to produce a product, whereas the manufacturing overhead is upwards of 40% of the total cost. So we needed a new way of applying the overhead to the product. And that came about 15–20 years ago when we began to look at costing activities. We looked at the overhead activities that were being consumed by the production of the product, and we assigned those costs to the activities. And then we looked at how many activities were consumed in the production of this product. So the focus here for management has changed rather dramatically. Activities consume resources, i.e. costs, and products and services consume activities. And in that way, we can assign the indirect overhead costs to the product or service that we are producing. In this module, we're going to look at activity-based costing. And to begin with, we're going to compare it to the traditional costing, job costing and process costing. Then we're going to identify the steps in the development of an activity-based costing system. We're going to introduce some new terminology here, cost pools and cost drivers. And then lastly, understand the benefits and the limitations of activity-based costing. Now, I want to compare activity-based costing to traditional costing. You recall in traditional costing that we allocate the overhead using a predetermined overhead rate. That could be direct labor, hours, direct labor dollars, and process costing most likely will be machine hours. The assumption here was that there was a close relationship between overhead manufacturing costs and that activity base, direct labor or direct cost or machine hours. And in the past, if you looked at the production of any product, 40% of the total cost would be direct material, 40% would be direct labor, 20% would be overhead. But today, that has changed. Overhead, because companies have become more capital intensive, putting in more machinery to replace labor. Today, the cost structure to produce a product is 40% material still, but 30 to 40% overhead and 20% labor. There's been a tremendous change in the manufacturing and service industry because of capital investment. There's been a decrease in the amount of direct labor usage and a very large increase in total overhead costs. So now looking at the traditional costing model, the relationship between the overhead cost and the activity base is no longer there, using direct labor hours as one allocation base or direct labor dollars or machine hours. So what is needed is a new approach to handling the manufacturing overhead, and that is activity-based costing, which allocates the overhead by using a number of activity cost pools. And it assigns these activity cost pools to the products or service by means of a cost driver. Now there's some new terminology. We talk about activity, and activity is any event, action, or work sequence that causes a cost to be incurred. An activity cost pool is a pool a distinct type of activity and the cost associated with that activity. For example, ordering materials or setting up machines. Now, a cost driver is that activity that drives a cost. That is, there's a direct cause and effect relationship between that activity and the resources consumed. Now, in activity-based costing, the first step is to take the overhead. Remember in the past we said the overhead was $1 million in job costing. Well, we take that $1 million and we break it into pools. That is, there might be facility costs like factory rent, utilities costs, their supervision kind of overhead costs. And we break them into those pools. We assign those costs to those pools. And then we assign the overhead allocated to the activity cost pools to the products by means of what we call a cost driver. It's all better explained by an example here, activity-based costing. So you see we have the total overhead costs, but now we break them for simplicity's sake into 4 categories. Those overhead costs that are related to purchasing, those overhead costs that are related to storing, those that are related to machinery, and those that are related to supervision. Now we're producing 2 products. At the bottom you see the AB bench and the AB coaster. Now the coaster looks a little more complicated to produce. So now we track the direct material and direct labor to the activity, to the AB bench, direct material and direct labor to the AB coaster. But the overhead now is going to be allocated to the products based on their consumption of the cost driver. So for purchasing, we're going to look at the cost of overhead costs of purchasing. We say, well, what drives purchasing costs? Well, that would be the number of purchase orders. So that's our cost driver. In storage, what drives the cost of storage? Well, that's the amount of square footage. What drives machining? That is the number of machine hours, supervision, number of people employed. So therefore, we estimate the overhead costs in those 4 pools, and we estimate the use of those cost drivers in the course of the year, and then we trace how many cost drivers from purchasing was the AB bench, how many was the AB coaster, what was the amount of square footage used for AB bench, storing AB bench. What's the square footage used for storing the coaster? What is the cost of machining? Would be the number of machine hours, would be the driver. Therefore, how many hours were used to produce the bench and how many the coaster? So you see now we're getting a closer relationship between those overhead costs and the activity. The idea here is that the activities, the number of purchase orders, the amount of square footage, the number of machine hours, they consume the costs. And then we look at how the product consumes the activity. Here is a more extended example. In this case, we have the overhead costs, but we've broken them into 7 pools. And then we look at the activity that drives the cost in each of those pools. And then once we come up with an activity-based rate for a purchase order, activity-based rate for the number of setups, or for setups, and the activity-based rate for machine hours, we apply that to the number of machine hours consumed in producing this product versus the number of machine hours consumed in doing another product. So again, it involves 4 steps. First of all, identify and classify the activities involved in the manufacture of a specific product or specific products and allocate those overhead costs to cost pools, i.e., take the overhead and break it into cost pools. Now, once you have the pools, identify what drives the cost, what activity drives that cost. And that becomes your cost driver. So now we divide the number of times that activity will be performed in a year into the overhead cost pool, and we come up with an activity-based overhead rate. For example, per machine hour, per square footage, per purchase order. And then we look at the products and determine how many of each of those cost drivers they consumed. And in that way, we are allocating the overhead costs, which we've estimated, to the products based on cost drivers. An example would suffice here. Here we have Atlas Company produces two products, abdominal train, AB bench and AB coaster. Now, the bench, they sell 25,000 units a year, the coaster 5,000. So each product requires, for simplicity, 1 hour of direct labor. So therefore, if we produce 30,000 units a year, we're going to consume 30,000 direct labor hours. And the direct labor cost is $12 per hour. The expected annual manufacturing total overhead is $900,000. Now the direct material costs are given for the bench and for the coaster. So when we're looking at traditional costing for the bench and the coaster, direct materials 40, direct labor 12, but we have to come up with that overhead rate. So we take the 900,000 divided by the 30,000 direct labor hours, and we get $30 per direct labor hour. Okay, so therefore, the bench takes 1 hour, it gets 30, and the coaster takes 1 hour. So we come up with a total cost. And we use that total cost, of course, management uses to set their selling price. Let's say they're going to set their markup at 100% of costs. So the bench they would sell for 164, and the coaster they would sell for 144. Now, what about activity-based approach? Well, the first step in the approach is to take that 900 and break it into different pools. And to keep it simple, we have 3 pools: setting up machines, and inspecting. Now, we look at the total number of setups are going to be 1,500. That's the activity. They think that activity will be performed 1,500 times throughout the course of the whole year. Machining, the number of machine hours that will be used in the course of the whole year, 50,000. Inspecting, well, 2,000. So now I've got the activities, and I have to come up now with an activity-based overhead rate. It's like our predetermined overhead rate in job costing, only we have an overhead rate for every activity. And for setting up machines, the activity is set up. We divide the 300,000 by the 1,500 times we're going to set up, and we get 200 per setup. We get 10 per machine hour, 50 per inspection. Now we go back in assigning the costs, and we look and we say, okay, of those setups, 1,500, how many is bench, how many will be coaster? How machine hours, how much for the bench, how much for the coaster? And inspection for the bench and the coaster. So now we have the direct material and direct labor, of course, have remained the same. We're now looking at the overhead rate. So we take the bench and we say, okay, the bench is going to be 500 setups, 200 an activity-based overhead rate. So it'll be 100,000 assigned to the bench for setups. For machining, 300,000. For inspecting, 25,000. So in total, of that 900,000 overhead, 425 is related to the bench. And I produce 25,000 benches. So therefore, the overhead rate the overhead cost per bench is $17. For the coaster, a coaster consumes more activities in setup, more activities in inspection, less machine hours. However, 475 of that 900,000 is related to the production of the coaster. And we produce 5,000 coasters. Therefore, the overhead that should be assigned to every unit of AB coaster that we produce is $95. And so here's traditional, okay, which would result in overpricing the bench and significantly underpricing the coaster. The bench, we said, would be 82, but in reality, with activity-based costs, it's probably closer now to 69. So we've been overstating the cost of producing the bench. Therefore, our selling price would have been affected. Where the coaster, on the other hand, we understated it. My goodness. The amount of overhead assigned to the coaster should be 95. So the total cost under ABC would be 137 as opposed to 72. So you can see now from an example that ABC has a closer match between the overhead, because the overhead is consumed by activities, and then we allocate the activities to the product. Here's another example. Again, we're producing two products, scissors jacks and a truck hydraulic jack. What we do is we take the overhead, in this case, $5,300,000, and we allocate it to 5 different pools. And then we look at the activities and the amount of activities consumed in each one of those pools. Then we come up with an activity-based rate. By that, we take the number of scissors, the estimated overhead would be that, the total amount, so it's $80 per hour for purchase orders, per purchasing order. $500 per setup, $250 machine hour, $60 for repart, and $20 per test. And in that way, I'm going to allocate the $5,300 to these activities and then look at how many of these activities were consumed by the car jack and how many by the truck jack. So now I have 1,000, the activity base, and I simply work through. You can see the value of Excel into an ABC. And there, the 5,000,003, 2,560,000 is for the scissors jack, 2,740,000 is for the hydraulic jack. Okay. And our cost per unit. There we go. Now, the benefits of ABC, more accurate product costing, which means better pricing of our product. We use cost pools. It enhanced control over, we now feel as management, we have control over some of those overhead costs. We're looking at the activities. We're not looking so much at the dollars. We understand the activities consume dollars. So if we can reduce the activity, we would reduce the amount of dollars consumed and therefore make better management decision. Now, the limitations of ABC is a very, very expensive and time-consuming effort to put a cost to every type of activity within a manufacturing firm. And many companies have done that. And once you have it in place with computers, it's easy to continue to monitor it. But the upfront investment in putting ABC in place can be very extensive. And secondly, we still are dealing with estimates, and allocations are based on arbitrary judgments as to how many times this activity would be performed in a year. But nevertheless, it's much better than the traditional cost accounting system. It's a new way of looking at management. The theory, the philosophy here is that activities consume resources. Products consume activities. And that's an overview of activity-based costing.